Today is December the 6th. I'm Matthew Long, and this is everything I traded in my Charles Schwab options account, my year-to-date performance, and my day change and how much money I made or lost in today's trading. Okay, as you can see, today is the 6th of December, and we're in my Schwab options account, and today we were up about over just a 0.5%. Year-to-date, we are up 103% on this portfolio. All right, here are my risk on trades. There's quite a bit of action going on in my options. What we're currently trading is Meta, the TLT, Chevron, and also, let's see what we got down here, Toll Brothers and Nike. Okay, so we got a lot going on right now. So let me explain these trades, what I'm doing this week, and hopefully this helps some of your trading as we progress through the rest of this week. All right, as you know, we were in American Airlines for quite some time. Unfortunately, I had to liquidate that stock position because I got caught up in this whole Lululemon short. But long story short, I still like airlines. This has had an awesome run. As you can see, we're up 10% in 5 days with American Airlines. So as long as oil continues to trend down and we're in holiday travel season, this is going to continue to fly. But I did have those $15 strike calls that I bought that expire next week. So I was pretty much on borrowed time. So this nice move right about here, as you can see in the stock, I went ahead and exited. So I'm okay with that, exiting with my premium. So if we look at WTI crude right now, it has gotten absolutely smoked in the last month. But I'm starting to think we're going to see some support right around in this range in the upper 60s. And Chevron, ExxonMobil, these are pretty good pickups if you're starting to look for an oil stock. So for that energy trade, I'm in Chevron. I'm in what's called a put credit spread. So basically, I sold a put at the 141, meaning I don't want the stock to go any lower than 141 in the next 2 weeks. So long as it does that, we're profitable. In the event that it starts to slide down, that's why I bought puts at the 138. That's what makes it a put credit spread. Now, if we start to look at the bond market on the long end of the curve, we've seen a robust bounce back from when the 10-year was at 5%. It's trading, I believe, just under 4.25, 4.2 in today's trading. But anyhow, this is the TLT, the 20-year Treasury. And as of yesterday, it looks like Carter Worth and a few other analysts that I listened to are starting to sell bonds. So right here, we are starting to sell short on the bond market, especially the long end of the curve. So on this trade, I don't want the stock to go any higher than 96. In the event that it does, I also bought calls, which is a call credit spread, up to about $97. So again, you have some upside protection with buying the calls, but at the same time, where the profit is really made is we need it to stay at 96 and go down. So I'm thinking yields will go back on the rise, and if yields start rising, this will start to fall with it. And yes, the 10-year Treasury actually closed at about 4.12. So at a certain point, this is probably going to bounce. That would be my inclination. Another trade that I put on was with the builder. So Toll Brothers reported this morning. I will say this about builders. I am in the real estate business. This is at 52-week highs. It hit around $90 plus a share some point in today's trading. My thing is if rates are going to start getting cut, it's kind of a double-edged sword, so to speak. So hear me out on this. It's a good thing for real estate if rates fall, but think of it for the builders. The builders have enjoyed over the last probably, I would say, 9 or 12 months. With higher interest rates, they were able to buy their rates down because they can actually originate their own loans with people looking to buy new construction. So it's very difficult, especially if you're a realtor, if you're trying to get your client with the best deal. Resale, you're stuck in whatever the market will provide you, and that's been typically 7-8%. So a new construction home offering 5%, I'm going to go with new construction probably 8 out of 10 times. Here's the thing. If rates start falling, all of a sudden it starts to make resale a lot more competitive, so it's going to pull demand away from new construction. So right now, I think this has been a great run for builders, but it's probably going to take a breather, so I went ahead and sold the the $92 put on this, and I sold the $90 call on this, and for upside protection, in the event somehow it was to run a little bit more, I bought the $92 call. So I did a call credit spread on Toll Brothers. I just think this needs to take a breather. It's had a great run, but at this point, it's probably time to give back some of those gains. All right, and so my last trade of the day was Nike. I have been watching Lululemon for the last few days, and as you know, the start of the week, it was an extremely high-risk trade when I shorted that to kind of get a lot of the money that I had lost being assigned this stock. So long story short, To buy premium to buy any options for Lululemon, the implied volatility is like 7%. It is extremely expensive to buy premium or in any option contract right now at Lululemon. As a retail apparel company, my next best bet to play it, because honestly, I want Lululemon to actually have a good print and go up because it would set up a beautiful short. But in the meantime, if I was to miss it and it does say come down a couple points, I want to at least get a little bit of that action. So what I did is I jumped over here to its counterpart, Nike. And what I did is I sold some in the money calls. Approximately, I sold the 115 call that'll pay pretty good premium. But in the event Lululemon comes out and has a good report and it pulls all the retail apparel companies up, I did buy some out the money calls too for this position. But again, this is more or less my way of playing the earnings release for Lulu, but in Nike. So the goal for this trade is we want this to be at 115 or less by Friday. All right, here's one last look of all those options positions that I have and the bases. But as you can see, I exited the American Airlines calls that I bought. There's the Chevron spread, the TLT spread. There is the Meta Jade Lizard. I'm still holding into that trade. And there are the new trades put on Nike as well as Toll Brothers. Well, guys, I know my videos are a little bit longer, but I'm just trying to explain what I'm doing a little bit more to you guys out there. I hope you guys are getting value in these videos. Feel free to jump in the comments, ask me any questions or what you're trading, anything like that. But again, this is not about option buying. There's a lot of finance channels out there that all they do is buy options, and that is extremely speculative because, again, you're going against time. When you write or sell the options like I do, time is in our favor. So you're limited to upside, but you also have a lot more resources going into your favor. So that being said, one thing I tell all of my followers, do not day trade. That is extremely high risk because now you're trading on the spot price, and basically whatever you're trading, if it's XYZ or ABC stock, it's a zero-sum game. There's a winner and there's a loser, and for basically option writing, I don't have to be 100% right. I can be pretty right, somewhat right, and I still make money. So that all being said, let's see how these trades go for the rest of the week. Tomorrow's Thursday. I'm excited. That's Lululemon's earnings. I'm really interested to see how they report, as well as we'll have Broadcom reporting. So let's take a look at how those stocks do and throughout the rest of the week. As always, thanks so much for watching. I'll see you guys tomorrow.